Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. Well, in our quarterly ALCO broadcast that Dr. Ed and I did recently, we talked about the economy, the direction of where we think interest rates are going. And it comes back down to what we have watched over this past period of time, that we look at Fed Philadelphia's December 2013 leading indexes, looking at the expected 6-month change. And as we've watched these over the months, the colors move around. But what is interesting in terms of growth is that essentially this month, 1.7% growth for the country overall. Interestingly enough, average for last year, right around 1.7%. We then go to the 3-month change, and the 3-month change this month, 0.8%. If we look at over the past year, 0.75%. So what is this telling us? It's telling us that we're going to have the same kind of growth patterns that we experienced last year, that we experienced even the year before, which is slow to moderate growth. Does that mean that unemployment is going to improve? Well, that is what's on the Fed's mind in here. And they must be seeing something, because one of the things that I was a believer that the Fed would not taper, now we've gone through 2 taperings in here. And yet, look at the changes in our overall economy, is that it would suggest once again it's going to be like it was last year. That would suggest that interest rates overall on the short end out through the next year, most likely no change, because we just don't have the economic oomph to get things going. And Dr. Ed talks about that in our quarterly webcast and why he thinks that's happening. When we look at, for instance, the Fed, the participation rate, and the Fed considering this, is that after all of the asset purchases in here, all the QEs put together, is that the participation rate, even though it improved slightly this past month, is that it's at the lowest level since the 70s. And we keep talking about this, that you could sit there and say, what have all these asset purchases done in here? And one could say, based upon the participation rate, that we have less people working out there, even though that unemployment rate has come down. But when we look at the larger population and the number of people not even seeking work, this is a concern. And it's got to be a concern for the Fed in here, because it just is not improving. But one thing that Dr. Ed pointed out is that look at the overall number of people on disability. And this trend is an alarming trend in here in terms of that growth in people with disabilities. And that Dr. Ed talks about the fact that there's no longer a stigma in terms of going on disability or being unemployed. So how many of the people that once again are not working are instead going on disability? And this has a 2-point effect. It's not only the cost of paying for the disabled, but at the same time, these people aren't working and paying taxes. So what we've developed in terms of the entire population is moving close to 3.5% of our population is on disability. And if this growth trend continues in here, what kind of cost is that going to have to us as a nation? And this has got to be a great concern to all of us. This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.